Hi friends, welcome to my channel Trading 618. Okay, this is my new channel and the objective of this channel is to identify simple price action trading techniques based on market structure. Okay, we won't be using any of the indicators which many of the folks are using out there. So as we go along, we will see how markets present trading opportunities on every time frame, day in, day out. So we won't be using any indicators as told, and I will be creating a series of videos right from the basics of market structure, and we will be moving step by step to learn market structure, trade identification, and trade management. The techniques which I am going to show you are very simple and work on any time frame. It's not a rocket science and has you know been present all along, but just it's human psychology that we are not using it, and we are getting lured towards the fancy names of different indicators that this is a sure shot indicator will be working wonders and it will be transforming your trading journey, which does not actually happen. Okay, so I'll be showing you how to apply these concepts in the Indian market perspective. Okay, all right. So when I say that it's a simple technique, mind it, simple does not mean it's easy, because simple and easy are very different things. You see, for example, we all know that meditation is a simple step, but you know, not many people are able to follow it. In the same way, trading process is very simple. The emotions involved in trading are very complex because the human emotions or psychology is very complex. So we tend to make the process, simpler process, a very complex one, but it is not. It is just like psychological demons of ours, which are making the process complex. Okay, all right. So just to show the agenda for today's video, this is the first video of the series which I will be creating for market structure. Okay, all right. So we'll be having this agenda today. We'll move ahead to understand what the market structure is, and on the charts we'll be trying to identify the swings. We'll learn how effectively we can identify the swings. Okay, these are the terms like NSH, NSL, R high, R low. These are the terms which we'll be understanding on the chart itself. And once we are able to identify the new structure high, this is new structure high, new structure low, higher high, and higher low. So once we are able to identify all these things, we will be in position to forecast the future move. You see, we will be in position to forecast the future move, the move which is having the highest probability. The market having the highest probability direction in which it will be moving. We will try to forecast that. Okay. All right, guys. Let's move to the chart. Okay, this is the 15-minute chart of India Bulls housing, and we can start from anywhere. I mean, it's just a random thing. We can start from anywhere. The concept will be applied, which I'll be teaching, can be applied to any random thing, any market participant, anything. You know, doesn't matter you are trading stocks, futures, cash market, commodities, or even forex. It can be applied to anything. So, for sake of understanding, we'll be starting from here. Okay, this is the 15-minute chart of India Bus housing, and we'll try to understand what market structure is, right? So, as we all know, markets do not do not move in a straight line, in a linear line. They move as per the emotions of the traders and investors involved, and multiple participants of the market. Someone will be buying it, someone will be selling it. So it keeps on creating certain swings and thus providing us the opportunity to enter and exit from the market. For example, some people are buying here. If I just grab it, some people are just buying here, then some people are just selling here. It's making a swing. This is called a swing. And some people are again buying here, and other market participants are just booking the profit or initiating a sell position. In the same way, people buy here, sell here again, buy here, sell here again. You see, in the same way, market keeps on moving. When the supply side or the sellers are getting upper hand to the demand side, or sellers are getting excess of buyers, then the market structure changes. People sell here and the buyers do not push the market to a new high, and thus creating new lows. You see, people are trying to buy here, but they are not able to push the market higher. So we'll say that the market has just changed its course or trend into a downtrend. You see, from here it was in continuous uptrend. It was making a higher high, higher low, higher high, higher low. In the same way, from here it is in continuous downtrend. You see, so these are the opportunities. Now we will try to identify how we can judge where to enter, how to identify a trade. You see, how to enter a trade and how to exit a trade, and how to identify a trend. Okay, all right. So we'll just proceed to identify. We'll learn how to identify the swings. Okay. So if we start from right from here, right? So this is a high, right? This is a high. We can call this new structure high or NSH, because because this is the first high which we are seeing in this frame. Okay. Now this is the lowest point. So we can call this as lower low. Market has moved from a lower low to a new structure high. There can be a new structure high somewhere, to the left side of this particular screen. But for now, we are only concerned what we can see on the screen itself. So this is our lowest point and this is our highest point right from the starting. If we go along, anything which crosses this particular high, you see, any price movement which crosses this new structure high will be making another new structure high. So we can say that this point is above this and it has made a new structure high. So we need to figure out what is the lowest point between a new structure high, you know, which has been created, and between the previous lower low. You see, so this is a new structure high. It has crossed, the price has crossed here, it has made a new structure high here. Okay, now we'll see what exactly is the lowest point, the retracement point. This is called the retracement. So we have created a higher high or a new structure high here. Here it is a new structure low. Sorry, It is a lower low. New structure low is something else when the trend changes. I'll be teaching that as we go along. In fact, we can call this a higher high. See? Because new structure high is something, the first high which will be made once a downtrend will be changing into an uptrend. So this is already an uptrend from here. This is already an uptrend going on. So we have not made a new structure high. This was not new structure high, and once this is crossed, we have made a higher high. Once a higher high is made, there are people or participants who are looking to book profits. You see, so they have booked the profit here. It has made a new, sorry, it has made a lower low, and again the buyers have taken control over here, and they have lifted the market to a new high, which is higher high. So this is okay. If you can see, this can also be marked as a higher high. Inside of this entire process, entire swing, this much swing, if we want, we can label these things. The smaller swings as well. You see, we can sorry, label this as a higher high. We can label this as a lower low. We can label this as a lower low. So the thing which needs to be understood is that we need to figure out the highest point in the screen, or the area we are concerned about, and the lowest point. So yeah, price moved here. Suppose it was a downtrend. We are not too much concerned about the past. I mean, if we are trading today, then 3 days of price action, prior 3 days, it's more than enough. We do not want to know what exactly happened a month ago, so that we are identifying the swings from there. Not required. So, for example, we are having the reference of this particular time frame here. Then we can see that this is the low, this is the high. If there was a trend coming out here, we are not concerned what happened there. We have seen that on the screen this is the highest point, so we will mark it a higher high. And after this, and between this lower low and this higher high, the retracement is this. And after this retracement, a new high has been created. You see, this is again a higher high. So once this higher high has been created, our swing will be changed from this to this. Now this is our range, or you can call a workable swing. So now this is our lower low, and this is our higher high, right? After that, once this higher high has been made, people are still booking profits. Some new shorts are initiated, or people have, you know, sold the market. So this will become a new lower low. This will become a new lower low. Now, once this particular higher high is breached to the upside, it will again lead to a new higher high, like this. Now our workable swing changes to this. I hope you are able to understand what I'm trying to say. These are the swings which we need to be concerned about. These will be used to identify trade opportunities, the optimal entry points. These will be used. The first step will be to identify the market structure. Once that has been identified, we will then go ahead in the subsequent videos to identify the optimal trade points where we can enter into the market and benefit or profit from its movement. All right. So once this particular swing has been breached over here, now our workable swing is this. It has changed. You see that market is constantly moving up. It's not moving in a straight line. As I said, it never happens. Hardly happens. There can be some scenarios where there is euphoria, there is some news or something, and it moves very highly in a single swing. But most of the time, market moves in smaller swings. Whenever it is moving up, it will be moving, printing higher high, lower low, higher high, lower low, higher high, lower low, and a higher high, and a lower low. In the same way, our swings will be changing. Our swings will keep on changing. Lower low, higher high. Okay, this way it moved here. The lower low has been shifted here. Now, once, sorry, not this one, or you can mark this as well. Whenever there is a very minute retracement, it can be ignored and it can be adjusted, or it can be, you know, thought of the same swing, same leg. So this higher high has been created. Now comes a reversal point. Yeah, we need to keep our attention with it. Okay, so this higher high has been created with this lower low, right? This is our lowest point. Okay, so good so far, right? So this is the new set. You see, this particular higher high was very hardly breached. You see, it was a blip which moved above this high, and after that, the market just reversed to the downside. Okay, now we have not printed a higher high. We have the trend. Once this lower low has been broken, the trend has been reversed. Now we are in a downtrend, and this lowest point which has been created will be called as new structure low, right? Because the lowest position which was leading to the highest position has been breached. It has been violated. So the market participants are no longer seeing opportunities to go long. Instead, they are pushing the price downwards, south. All right. So once we have made a new structure low, the retracement point between now our workable swing has changed. Now this is our highest point and this is our lowest point. This is the new swing. Previously we were moving between this and this. You say, I'll draw that. Previously we were moving in an uptrend like this and this and this and this. You see? Now the trajectory of the move has changed. We have breached the lowest low which was leading to a highest high, and we have started something like this. We have started something like this. You see? Okay. So let's mark these points as we move along in the negative direction or in the lower direction. Now this one is new structure low. Now this point between this highest high and a new structure low will be called a higher low. Why higher low? Because this low has been created and it is higher than this low. Now we are following lows, but from this low point it is at higher position, so after this it will be a higher low, and the subsequent points which have been created. Okay, this is a lower low created. Now our swings will be changing like that. You see, we can pick this as well or this one because there are not too many bars here. We can have a certain criteria how to identify a swing, or there can be something like when there is a very small swing, we can take, say, a complete part as a swing. It depends. It's a small discretion which needs to be taken care of while identifying swings. Or maybe we can have this as a lower low. After this, new structure high low has been made. Now this will be our higher low, correct? We will again make a lower low here. You see this higher low and a new low. Again a low has been created from this higher low. So swing, our workable swing has changed. We are in a downtrend and our swings are being changed. Again, now this becomes our higher low, this becomes our workable swing, and this small area from 169.85 to 165.40, this is our new swing. Now again, price retraces upside, creating a new higher low, and we create a lower low again. So now this point will be our new swing high, and this will be our new swing low. You see, you keep on moving, and this thing keeps on going. If this is our new, sorry, this is our low, and the retracement until this, until this higher low is breached, the price action is still in downward trajectory. So after the retracement, our swing is this. It goes here, it goes here, and our workable swing is this. Okay, so up till now, this all price action, this all, this is our swing, right? Okay, now, okay, let me change the color. Sorry, not this one. All this price movement here, market rate, all this price movement here is the retracement of this white swing, but still this higher high is not breached by this retracement. So we can still say that the price is still in downtrend unless this lower higher low is broken to the upside. We cannot say that the price has reversed or the trend has changed. We still expect. Yeah, here comes our forecasting. You know, forecasting the future move. This fourth point. So once I have identified that the price is moving in an uptrend like this or a downtrend like this, our future projection or expectation, what we call, you see, we have not seen this part, forget about this part, but we have seen this thing, right? And up till this point is breached, this is still in a downtrend, so our expectation should be that the market will be breaching this low and creating a new low, right? Oh, sorry. Oh, my bad. Okay. You see, we have not seen any of these price unfolding, so we can say that the market is poised to make a new low. And yes, it is proved correct. New low has been created. In comparison to this swing, entire swing, one can argue that this point is also a swing, but this is a very small play, and I would not prefer to include this as a lower low. This does not call if in case we are trading on a very smaller time frame, 3 minute or 1 minute, we can use this swing as well. But as of now, 15 minutes, yeah, okay, 15 minutes is quite fine time frame for doing swing trading, or it can be also employed for doing day trading as well, right? So we have just identified our new low, and we need to check the retracement. Yes, markets are moving toward the top end of the swing. From there, we still have expectation that the markets will be breaching this and making another low. All this swing which is taking place, price action, it's just a retracement. Our expectation is still intact to see market breach the lower end, and which does. We have made a new low. Now our swing changes from here. We have a higher high here. The low has been breached, and we have made lower low here. All right, so this is the part which is aligned to the forecasting part. So in today's video, we have just checked to identify the swings or the market trend. Yeah, you need to pick this point. Like if the market is making continuous higher high and higher low, higher high and higher low, higher high and low, lower low, sorry, then it is an uptrend. We are supposed to look only for long positions, only for long positions. Okay,